traders, this is Rob. It is the trading room, March 25th through the 28th. Now that is not a typo. The markets are going to be closed on Friday due to Good Friday. I'm actually quite proud of myself because I forget it every year, because we always know that it's closed on Mondays. Most holidays are Mondays, but this one is a Friday. In this session, we're going to go over what happened last week. We had lots of news last week. And did we get a score change? And the answer was yes. We had 4 sectors have score changes, and we had the overall markets have a score change as well. And then we're going to look at the strongest and weakest sectors and find our trades in those sectors.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's get ready for the week.
So looking at last week's news, we did get a breakout to new all-time highs. However, we're going to take a look at the chart. It was one day, so we had a rally on Wednesday. We broke out, we gapped up on Thursday, and then we didn't go any higher. So we're going to be talking about where we are in this market, because this is a mature bull market. We've had a big run, and it's just going to act a little bit different, and I wanted to have a discussion with everyone about that. We heard from the FOMC. They came out and kept rates where they were, but they did 2 things. They upgraded the strength of the U.S. economy, which is very bullish for stocks, and they also said they're going to keep their projections of 3 rate cuts in 2024, which is also very bullish for the stock market. So the market's like that, and really we've been seeing this global rally all across the world. New all-time highs in Japan, Germany. I mean, just these markets are all moving higher together. If we take a look at the news of the week, we talked about the FOMC. That was the big news. Economic news has been okay. Hasn't been great. Just been okay. So we've had manufacturing peak up a little bit. So again, these are turning positive for the first time in like 2 years, these little regional manufacturing numbers. We had a really good existing home sales number. So the economy keeps going. It just keeps going, and it's looking good enough. And that's fine for a bull market. So let's go take a look at the numbers, take a look at the charts, and really see where we are in this part of the cycle. We had strong returns, the Dow, the S&P, and NASDAQ. You can see the NASDAQ was the outperformer at 2.87%. The Russell keeps underperforming. This has been something that's been happening all year long, and we continue to see underperformance. Oil and gold were pretty much flat on the week. Let's take a look at these charts, and this is what I was talking about. We had a nice high base breakout, and we had that on Wednesday. And you can see we had a gap up on Thursday, and then we didn't have any follow through buying. We need to understand this market. We are up, I don't even know how much off the bottom, 40% off the bottom in last October. That's a huge move in 6 months. And at this point, you have to assume that we don't have another 40% left in us, that all the gains from here on are going to be much more hard fought. I fully expect the next couple months to look more like the price action we've seen lately than the price action we saw in December and January. I think this is what we're in for, is this kind of slow grind higher. Look, no one loves this kind of market, but if you get on the bull side and you just hang in there, you get rewarded in these kind of markets. So again, the S&P looks good. We come up here to the NASDAQ, and it's still hasn't truly broken out. As you can see, we had that gap up, and then on Thursday we failed. We failed pretty badly on the NASDAQ. We're still in this base pattern, but look, the rest of the markets are breaking out. International markets are breaking out. There's no reason to think that the Qs are going to go into a bear market here. There's just no reason to think it. Yes, they don't look as strong, but with all the other markets moving to new highs, there's no reason to not think that this is going to move to new highs as well. And if we take a look at the heat map, here you can see that this is a very, very broad rally. So this is the return for the week. This is the weekly heat map. And look, you can see that there is strength across the board. Every single sector has mostly green. We are broadening this rally, which is a really good thing. And that was the message I had about 3 weeks ago, is that, hey, I think this is going to broaden out. If we go take a look at how many stocks are above their 50-day moving average, right now it's 65%. Usually when we get up into the 80%, that's when we get very toppy. That's when we start to see much bigger pullbacks and much more volatility. I still think this market has room to go higher despite the fact that it's up so much. So look, we just have to understand where we are in this bullish market cycle. This is a mature bull market. We no longer have the, monthly 6, 7, 8% gains. We're probably going to get closer to 1, 2% gains or flat. It's fine. It's fun. I've been talking about this for the last 2 to 3 weeks. I haven't changed the second one, later stages of a bullish move. This is where people start to get scared and they say, oh my gosh, it's gone up so much. Well, look, the technicals will tell us when it's time to go short. The technicals will tell us when it's time to no longer be long. We have to trust in the technicals that they know more than us, because we as human beings, we consume media. And if you listen to someone who's a little bit negative and someone who you respect, like I was just talking to someone who listened to Jeffrey Gundlach, which he's a great guy. He's a really smart person, way smarter than me. And he's been very bearish lately. That made them less bullish because they listened to someone that they respected. That is what happens as humans. I'm not saying it's wrong. I'm just saying that's reality. But if you completely give yourself over to technicals and you no longer are trying to, quote, figure it out in your brain, and you just go with technicals, the technicals are telling you to be bullish. So be bullish. Remember, Good Friday this week, so the markets will be closed on Friday. That being said, we have the core PCE price index on Friday. So this is a big report. This is the Fed's favorite inflation indicator, and this is going to come into play on next Monday. So until then, there's really not any major economic news that I think you have to be worried about at all. So the market is back to a +3. Last week, we backed it down to a +2 because we were just hanging out right here at the 20-day moving average. And you can see a week later, we are clearly back into the +3 category. So +3, +2, it's been bullish. And like I said, if you give yourself over to technicals, and I know that sounds very dramatic, it's like giving your life over to God. But if you just truly trust in the technicals, they have kept you bullish through this entire run. You've captured this entire run because, hey, you've been on the bull side. So until that changes, there's no reason at all to be bearish whatsoever. Let's take a look at the sectors and see the changes that we saw last week. As I mentioned earlier, we had 4 sectors that actually changed score. Last week, the strongest sector was the communication services sector. This had been basing for a very, very long time. It had been basing for so long that we actually downgraded it from a +3 down to a +1. Had a very nice breakout. We'll look at it. This is where we've really liked the market. We've been talking about 4 sectors. Last week, we had 4 sectors at +3. Industrials and financials, look how well those worked this week. We also had materials and energy. Okay, they weren't the superstars, but they still went higher. We did see a rebound in consumer and tech. These have been downgraded lately, and we're going to see that they have bounced back very, very nicely. Take a look at real estate. Real estate underperformed the market quite a bit. Let's take a look at the individual charts here. So here is utilities. Last week, we were at a +2. Utilities are still at a +2. We haven't seen that 50-day moving average start to slope higher, so until that happens, this is going to be sitting at a +2. Next, going to communication services. This is the one I was talking about. This base. We had based for so long that now that 20-day moving average was really not pushing up against it anymore. But you can see we broke out. So we like when things base for a long time and then break out because it tells us there's lots of energy behind that move. So we're going back to a +3 on comm services. Real estate, however, you can see that we're now trading below that 50-day moving average. We're close enough to it, but we are clearly below the 20-day moving average. So this has been downgraded to a -1. The only sector that is not at least above a 0 is the real estate sector now. Let's take a look at healthcare. You can see the healthcare basically flat. Last week we had it at a +1. We're staying at a +1. It is above the 50, but one line's going higher, one line's going lower, and it's at the 20. That's a +1. So you can't get excited about it. It's just moderately or mildly bullish. Coming over here to industrials. This is a sector that we've loved. We love both the industrials and the financials, and you can see these were the ones that really ripped higher this week off of the Fed meeting. So there's no question that this remains a +3 like it was last week. This looks great. Coming over here to financials. Financials did the same thing. It was a +3 last week. A very, very strong week. Yes, big pullback on Friday, bearish engulfing. So we would expect there to probably be a couple more red candles. But I think getting back into financials, once they're done with this pullback, looks like a good bet here. We had recently downgraded the consumer discretionary to a 0, and here we are back to a +1. So we're close enough to this 20-day moving average that we said, okay, let's just give that a 0, but we're clearly above the 50 and don't have a good slope on the 20. Look, this is just moderately bullish or mildly bullish. It did get an upgrade though, so that's something I really want to be aware of. When things get an upgrade, it means that the trend is strengthening. When something's at a +3 week after week after week, it doesn't really tell you that the trend is strengthening. But when things move, that's when we really want to be aware of, oh, it's strengthening now or it's weakening. This trend is actually going somewhere. Here is technology. Tech last week was a +1 and it gets a bump up to a +2. So +2 for tech. Materials last week were a +3. They remain a +3. Okay, we would like to see a little bit better break out of this high base, but look, it's still clearly at a +3 bullish. And the sector I've liked the best over the past 2 weeks, it's been very kind to me, is the energy sector. Seems like all the trades I make in this sector are working out very, very well. It remains a +3. So here's where we were last week. So we did get a downgrade in real estate. Real estate, the only sector that is actually weakened. We got upgrades in 3 sectors. Comm services goes back to a +3, and tech to a +2, consumer to a +1. As you can see here, we still know where the strength is. Comm services, energy, financials, industrials, materials. These sectors are working very, very well. Tech is starting to work again, possibly. We got tech and utilities as a +2. And then we got real estate sitting out there, totally left behind by everyone. Let's go ahead and take a look inside some of these sectors for some possible trades. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. We haven't touched the utilities sector in a while, so let's peek in here. So utilities was at a +2, but it's been at a +2. And here we have AEP, American Electric Power. Now I'm looking for something that is, sideways to slightly bullish. And you can see that for the last couple months, we've just really been between this 75 and 85. However, we are trading near the upper end of this. So I'm looking at this range right here. I'm really looking for this 80 to 85 range. And this is where I want to put together my butterfly. I love crisscrossing moving averages. That's telling me that, hey, there is no trend at the moment. There's just no trend whatsoever. So that's telling me, okay, you can go ahead and throw a sideways trade on because there is no trend at the moment. So I'm looking at that range, the 80, 82.50, 85 butterfly, right here in this area. So as long as it stays in this area, it's going to be a decent trade. It only has monthlies, so we had to go out to the April 19th monthly on AEP. Moving over to real estate, looking for bearish trades, always looking to have some bears because we have no idea what's going to happen with the market. And if we're 100% bullish, the market turns are really brutal to your account balance. If you have some bears, it softens the drawdowns in your account balance. Here is CCI Crown Castle, and this is just a beautiful, beautiful chart. And if you open up a longer dated chart, you're going to see that it had a run, and then it backed off, and then it based, or it went sideways for a while, and you can see we're now breaking down below. So we've clearly broken this 105 support, and here we are headed down probably to 100. So that is the trade I'm looking to make, is basically calling that this thing is going to go to 100. So the April 19th, 100, 105 bear put spread. The stock is currently at 102.80, which means I'm going to pay about $2.30, which means I've got $2.70 of upside. Again, this is just a very, very solid bear put spread. Right, next up to Comm Services. Now, Comm Services had a really nice breakout of a really long high base. I really like that when they get an upgrade because it tells me this is a sector that's strengthening. I know it's been strong, but it doesn't necessarily mean that it's going higher. When they change scores, it tells me it really is strengthening. So here is Cinemark, CNK, and you can see just a nice little pattern here. Ran up, based, ran up, based, ran up, and now we're getting a bull pullback. We're getting a bull pullback, and we finally got our reversal candle. Now look, we do not have a confirmation candle yet on this one. We need to see a green candle on Monday. Then I think this trade is ready to go. So this just needs one more day. But if we can get a bullish candle on Monday, I think this thing's ready to go. And I like it where it is right here, the 18-19 area. Yes, could it go higher? Sure, it could go higher. Maybe up to 20. I mean, there is a possibility that you get a trend line all the way up to 20. But I always like to take those targets and say, you know what, I'm less optimistic than my most optimistic thing. I'm just looking to do 18-19. 18-19 bull call spread for April. Now, if you don't want to even be that bullish, you could do a 17-18. Now, this is going to be an in-the-money spread. You're going to pay about 60, 65 cents. So you're only going to have 35 cents of upside potential, but it's a very, very high percentage trade. Basically, 65% of the time, that will be a profitable trade. If you want to do something less aggressive, and this is where I always like to give options because a lot of you out there don't feel bullish. And it's because, and again, I'm just going to talk frankly here. Your political party is a very big determining factor of how bullish or bearish you are. The more you are into politics and the stronger you are attached to one of these political parties, you actually completely change your perspective on things. And there's a study that they did, and I love this study. They did it right before the last election. They interviewed Republicans and Democrats, and they asked them, what is your opinion of the economy? Do you think it's a good economy or bad economy? Well, before the election, 65% of Republicans said it was a good economy. This was in 2020. So Trump was the president, and 65% of Republicans said, yeah, it's a good economy. Only 30% of Democrats thought it was a good economy. Now look, the economy was great in 2020. We all know that. Then the election happened, and they interviewed the same group of people 2 months later. So this was like in February. 2 months later, Democrats, 65% of them said the economy was good. And Republicans, only 30% of them said it was good. Nothing had changed in economic numbers over those 2 months. The only thing that had changed was the presidency. That's it. That's why I'm saying give yourself over to technicals. It's very difficult. The stronger you feel about politics, the more you are just making your life really difficult as a trader. So look, you can be passionate about politics, just check it at the door when you come into trading. All right, I got off the topic quite a bit on Cinemark, but here's your trade on Cinemark. Somehow I got into politics, which hopefully you can tell I love politics, but I've had to learn to check my politics at the door when it comes to trading because it only hurts you. Right, next let's jump into tech. Tech got an upgrade, so now I'm looking back into tech. I've been pretty not so hot on tech lately because it hasn't been breaking out. We got a little bit of an upgrade. I'm willing to now look at something more bullish, and I came across Microsoft on a scan. Now, whenever I come across a very popular trading stock like Nvidia, Tesla, Microsoft, I absolutely hate when I look at our traders' accounts. And look, I know I'm going to offend some of our traders, but that's fine because I like to be blunt. And if they're only trading Tesla, Microsoft, I know they're not doing scans. And because they're not doing scans, I know they're hyper-focused on these stocks. And it's just a symbol. It's just a symbol and a bid ask. But they think that it's magical. They think, oh, I have a Tesla. I love Tesla. Guess what? Tesla goes up and down based on supply and demand, just like hundreds of other stocks do. And frankly, there's better trading stocks that have better volatility, better trends than everything. But they're married to these things. So whenever I come across like a Microsoft, I found this on my scan, and I looked through all the things that my scan brought up, and I concluded that this is the trade I want to make. But I'm always hesitant because I'm wondering in the back of my mind, am I picking this one because it's familiar? Am I picking this one because I have a favorable outlook about them? So again, trust the technicals. Here we have a base. I love the fact that we've based for about 6 weeks and we're breaking out. Now look, the breakout wasn't spectacular. It wasn't wonderful. So I can still play this breakout, but not expect it to run. And that's exactly what I'm going to do. I'm going to say, hey, look, I don't know if Microsoft's going to run up to 450, and I don't care. I just want it to go to 430. You can see that that is a very reasonable trade. A 425, 430, that's a reasonable trade. Yes, you could do a 435 if you wanted to. You want to be a little bit more bullish. But there's a lot of ways to play this where you don't have to be super bullish. So you can look at a diagonal call spread, which this is the one I like the best. This top one, this April 19th, 425, 430 diagonal call spread for next Thursday. That's the one I'm looking at. But again, you don't have to be ultra bullish. You can be moderately bullish and still make money in this market. And lastly, energy. I still think energy has some ways to go. I like it. The trade we had last week was up about 3 or 4% on the week. ERF, I believe it was. Here I found another one. This is one of my favorite patterns. And it took me a long time to get comfortable with this pattern. This is what I call a rising base. Look at this. This stock had a huge run, 60 up to 72. That's a 20% gain. And what happened? It didn't even base. It's basing going up, sloping up. For a young trader, I would look at these and I say, I already missed it. You know, I need to wait for it to pull back. It's not even basing. It's not even pulling back. It's not giving me any opportunities to get in at a, quote, reasonable price. I've seen these enough. These are some of the most powerful plays, and it's very typical that you get a really nice extension off of these rising bases. So that's what I'm looking here for. And I'm looking all the way up to 77.50. So the 72.50, 77.50. And you can see that's going to be basically asking this thing to go right up to the top of the screen. It's not an unreasonable trade, but definitely a bullish trade as far as price action goes. Those are the trades I have for you this week. If you have some trades you want to share with the group, please go to the website, log in, go to the forum, and let's get that discussion going. To wrap this all up, We are in a mature bull market. And I'm just going to use that term. It doesn't really mean anything. No one's quantified what that means. So I tried to quantify what that means. We have had a big run, and the easy money or the big money has been made, but there's a lot of things to be bullish about. The market probably grinds higher. Just get ready for that. So what you want to do on these markets is you want to have a long enough time frame on your trades. You don't want to ask your trades to do too much. And if and when we do get pullbacks, they usually only last a day or two. Those are great entry days for new trades. So if you've got capital on the side and we get a 1 or 2 day pullback of 2 or 3%, man, those are great days to enter trades because you're getting an even better price on those. So just expect that for the next couple months. Of course, we'll keep an eye on everything, and if things change, we'll change our outlook. But for right now, that's kind of what it looks like for the next couple months. Hey, have a great weekend, and let's go make some trades next week. Goodbye, everyone.